Hey, welcome back to the show, everyone. Today, we are taking a close look at the Indian Railway Catering and Tourism Corporation, or IRCTC. They've just released their numbers, and there's a lot to unpack.
Absolutely. IRCTC is a fascinating company, a mini Ratna, actually a Navratna enterprise of the Government of India. They're the only entity authorized by Indian Railways to provide online railway tickets, catering services on trains and at stations, and packaged drinking water at railway stations and on trains in India. They're also big into tourism. Quite a diverse portfolio.
Indeed. So, this report covers their audited financial results for the quarter and year ended March 31st, 2025. The Board of Directors approved these results in their meeting on May 28th, 2025. We'll be looking at both their standalone and consolidated figures today. Let's dive right in. What are the headline numbers looking like for the latest quarter? Q4 FY25.
All right, starting with the standalone financials for the quarter ended March 31st, 2025, the revenue from operations was 1,268.53 crore rupees. Comparing that year over year to Q4 FY24, which was 1,151.7174 crore rupees, that's an increase of about 10.14%. Quarter over quarter, compared to Q3 FY25's 1,224.6559 crore rupees, it's up by about 3.58%.
Okay, a decent uptake both year over year and quarter over quarter on the revenue front for standalone. How about profitability? Let's look at profit before tax, or PBT.
For standalone PBT in Q4 FY25, it stood at 471.9294 crore rupees. Year over year, this is a significant jump from 382.2345 crore rupees in Q4 FY24. That's up by 23.47%. Quarter over quarter, compared to 456.7124 crore rupees in Q3 FY25, it's up by 3.33%.
Strong growth in PBT. And the bottom line, profit after tax, or PAT.
Standalone PAT for Q4 FY25 was 357.9471 crore rupees. Year over year, this is up from 284.3654 crore rupees in Q4 FY24, a nice increase of 25.88%. Quarter over quarter, it's also up from 341.2143 crore rupees in Q3 FY25. That's a 5% increase.
Haha, what a good result. And the earnings per share EPS for standalone?
The standalone basic EPS for Q4 FY25 is 4.47 rupees. Year over year, this is up from 3.55 rupees in Q4 FY24. Quarter over quarter, it's up from 4.27 rupees in Q3 FY25.
Now, let's switch to the consolidated financials for Q4 FY25. How does the revenue look there?
For the consolidated revenue from operations in Q4 FY25, it's also 1,268.5299 crore rupees, virtually identical to standalone. So the year-over-year growth is also about 10.14% from Q4 FY24's 1,151.7174 crore rupees, and quarter-over-quarter growth is about 3.58% from Q3 FY25's 1,224.6559 crore rupees.
Okay, consistent revenue. What about consolidated PBT for the quarter?
Consolidated PBT for Q4 FY25 was 472.3062 crore rupees. Year over year, this is up substantially from 381.9932 crore rupees in Q4 FY24, an increase of 23.64%. Quarter over quarter, it's up from 456.5504 crore rupees in Q3 FY25, which is a 3.45% increase.
And the consolidated PAT?
Consolidated PAT for Q4 FY25 stood at 358.2291 crore rupees. Year over year, this is up from 284.1848 crore rupees in Q4 FY24, a healthy 26.05% increase. Quarter over quarter, it's up from 341.0894 crore rupees in Q3 FY25, an increase of 5.02%.
And the consolidated EPS for the quarter?
The consolidated basic EPS for Q4 FY25 is 4.48 rupees, year over year, up from 3.55 rupees in Q4 FY24, quarter over quarter, up from 4.26 rupees in Q3 FY25.
It seems the standalone and consolidated numbers are very closely aligned for the quarter. Any significant other income we should note for Q4?
Yes, for Q4 FY25, standalone other income was 61.212 crore rupees and consolidated other income was 61.1572 crore rupees. This is a substantial increase from Q4 FY24, where both were around 32.63 crore rupees. Quarter over quarter, it's also up from around 56.3 to 56.5 crore rupees. So other income has definitely played a part this quarter.
Good to note. Now let's look at the full year performance for FY25, starting with standalone.
For the full financial year FY25 standalone, revenue from operations was 4,674.7710 crore rupees, up from 4,260.2135 crore rupees in FY24. That's an increase of 9.73%. PBT for FY25 was 1,756.9524 crore rupees, up from 1,496.2837 crore rupees in FY24, a 17.42% increase. PAT for FY25 was 1,314.6561 crore rupees, up from 1,111.2579 crore rupees in FY24, an 18.3% increase. And basic EPS for FY25 was 16.43 rupees, up from 13.89 rupees in FY24.
And for the full year FY25 consolidated?
For the full financial year FY25 consolidated, revenue from operations was 4,674.7710 crore rupees. Again, same as standalone, up 9.73% from FY24. PBT for FY25 was 1,757.2865 crore rupees, up from 1,496.0424 crore rupees in FY24, a 17.46% increase. PAT for FY25 was 1,314.9024 crore rupees, up from 1,111.07073 crore rupees in FY24, an 18.34% increase. And consolidated basic EPS for FY25 was 16.44 rupees, up from 13.89 rupees in FY24.
The full year picture also shows solid growth, mirroring the quarterly strength. And again, standalone and consolidated are very much in sync. What about profitability margins for the full year?
For FY25, the standalone net profit margin was about 28.12%, 1,314.6561 crore PAT divided by 4,674.7710 crore revenue. For consolidated, it's virtually the same at 28.13%. These are very healthy margins.
Definitely. Were there any significant exceptional items reported in FY25 that influenced these numbers?
Yes, there were. For FY25, on a standalone basis, there was a net income from exceptional items of 47.8873 crore rupees. This included reversals of charges for the Golden Chariot train, a net impact from one-time reconciliation of legacy balances, and excess provisions written back. For the previous year, FY24, there was a net expense from exceptional items of 58.5303 crore rupees, mainly due to provisions for Tejas Express charges and Railneer profit sharing. The consolidated exceptional items are identical to the standalone ones. So, the swing from a net expense in FY24 to a net income in FY25 from exceptional items has certainly boosted the reported PBT and PAT growth this year.
That's an important clarification. Let's touch upon the balance sheet. Any key highlights from the standalone statement of assets and liabilities as of March 31st, 2025?
Looking at the standalone balance sheet as of March 31st, 2025, total equity stands at 3,663.2993 crore rupees, up from 3,229.9690 crore rupees a year ago. Key non-current assets include property, plant and equipment at 668.7243 crore rupees. Under current assets, trade receivables are substantial at 1,734.2341 crore rupees. Cash and bank balances, including other bank balances, together are over 2,137.32 crore rupees. On the liabilities side, under current liabilities, trade payables are at 1,034.1345 crore rupees and other current liabilities are at 1,323.6104 crore rupees. The report mentions the consolidated statement of assets and liabilities, page 18, figures are very similar, reflecting the close operational alignment.
And cash flows? What does the standalone statement of cash flow for FY25 tell us? And any news on dividends?
For the year ended March 31st, 2025, net cash generated from operating activities, standalone, was 833.7333 crore rupees. This is down from 882.1733 crore rupees in FY24. Net cash used in investing activities was 239.4808 crore rupees. Net cash used in financing activities was 909.8014 crore rupees, primarily due to dividend payments. Regarding dividends, yes, the board has recommended a final dividend of 1 rupee per equity share for FY24-25. This is in addition to a first interim dividend of 4 rupees and a second interim dividend of 3 rupees per share already paid. So the total dividend for FY24-25 comes out to 8 rupees per share on a face value of 2 rupees. That's quite a payout.
That is a significant dividend. Now, let's break down the performance by IRCTC's business segments. How did catering, rail neer, internet ticketing, and tourism fare in Q4 FY25 and for the full year? We'll look at the standalone segment results first, as they are very similar to consolidated.
Right. Looking at the standalone segment results for Q4 FY25, catering. Revenue was 529.3967 crore rupees, up about 9.15% year-over-year, but down 4.58% quarter-over-quarter. Profit before tax and interest, PBIT, was 64.5999 crore rupees, up 51.1% year-over-year, but down 4.51% quarter-over-quarter. Rail neer. Revenue was 95.9965 crore rupees, up 15.71% year-over-year and flat quarter-over-quarter. PBIT was 11.7068 crore rupees, up 9.86% year-over-year and down 1.31% quarter-over-quarter. Internet ticketing. This is the star. Revenue was 372.4711 crore rupees, up 8.77% year-over-year and up 5.3% quarter-over-quarter. PBIT was a whopping 306.9320 crore rupees, up 11.57% year-over-year and up 2.43% quarter-over-quarter. This segment has incredible margins. Tourism. Revenue was 274.4150 crore rupees, up 38.17% year-over-year and up 22.65% quarter-over-quarter. PBIT was 49.5957 crore rupees, up 119.81% year-over-year and up 30.86% quarter-over-quarter. Tourism has shown very strong growth.
And for the full year FY25, how did these segments perform?
For the full year FY25 standalone, catering. Revenue was 2,125.0553 crore rupees, up 9.13% year-over-year. PBIT was 271.7597 crore rupees, up 6.78% year-over-year. Rail neer. Revenue was 394.0461 crore rupees, up 15.71% year-over-year. PBIT was 46.1341 crore rupees, up 57.87% year-over-year. Significant PBIT growth here. Internet ticketing. Revenue was 1,426.221 crore rupees, up 10.1% year-over-year. PBIT was 1,179.4888 crore rupees, up 10.48% year-over-year. Still the cash cow. Tourism. Revenue was 744.9128 crore rupees, up 7.79% year-over-year. PBIT was 93.8243 crore rupees, up 281.98% year-over-year. Massive PBIT jump for tourism for the full year. The consolidated segment results on page 17 are almost identical, just minor rounding differences in some PBIT figures.
It's clear internet ticketing is the profit engine, but tourism has shown remarkable profit growth, especially for the full year. Any significant notes or events from the report that investors should be aware of?
Yes, quite a few. First, the final dividend of 1 rupee, making it 8 rupees total for FY25. Second, amendments to the Articles of Association (AOA) were approved, in line with enhanced financial and operational autonomy due to its Navratna status. Third, MS Balika Sharma and Associates were recommended as secretarial auditor for 5 years from FY25-26 to FY29-30. Fourth, there's an ongoing matter regarding GST reimbursement for 4 PPP rail near plants. An amount of 3.8846 crore rupees has been accounted for in FY25. The DCOs, developer cum operators, are disputing IRCTC's claim for input tax credit. This is being examined. Fifth, the National Anti-Profiteering Authority (NAA) notice from February 2022 for about 50.41 crore rupees under CGST Act for not passing on tax reduction benefits for rail near is still pending, now with the Competition Commission of India (CCI). No communication has been received from CCI yet. Sixth, there's a complex arbitration issue with certain licensees for catering services regarding differences in meal rates and welcome drinks for the period January 2015 to March 2020. An award of about 74.71 crore rupees was made. IRCTC deposited a bank guarantee. The Delhi High Court set aside part of the award. Both IRCTC and the licensee have filed further petitions, and the divisional bench restored the arbitral award regarding second regular meal and welcome drinks. IRCTC has filed an SLP in the Supreme Court. The company believes any liability would ultimately be reimbursed by Indian Railways and no provision is needed. And seventh, regarding the Railway Board's Commercial Circular CC60 of 2019 on increased catering tariffs, the effect of enhancement of license fee for certain periods has not been recognized due to legal challenges by licensees. This is sub judice.
That's a lot of moving parts, especially on the legal and regulatory front. Now, a very critical part, the auditor's report. What did NK Bhargava and Co. have to say in their independent auditor's report on both standalone and consolidated financials? Any qualifications or emphasis of matter?
For both the standalone and consolidated results, the auditors NK Bhargava and Co. have issued an unmodified opinion. That's good news. However, they have included several points under emphasis of matter in both reports, which means these are significant issues they want to draw attention to, even though they don't qualify the opinion. Many of these we've already touched upon. 1. The arbitration award of 74.7165 crore rupees plus interest. 2. The NAA notice of 50.4144 crore rupees. 3. The rail near profit sharing with railways for PPP plans at 40:60 versus IRCT's representation for 15:85. The differential provision was an exceptional item in FY24. 4. Issues with balance confirmation letters not sent to railways, cash basis accounting, unsatisfactory response from private parties, and DCOs of rail near plants not sharing ITC data and disputing claims. 5. Trade receivables as of March 31, 2025 include 1,672.43 crore rupees due from railways and government. Out of this, 120.77 crore rupees is outstanding for more than 3 years, including a defaulted amount of 35.80 crore rupees. Sixth, advance ruling awaited on GST applicability for certain income of about 335.95 crore rupees received mainly from the Ministry of Railways. Seventh, the non-recognition of enhanced license fees due to legal challenges related to Railway Board Circular CC60. 8. Certain differences in subsidiary and control ledger balances are under reconciliation, and improvement is needed in identifying MSME suppliers. 9. The matter of enhancement of charges for Tejas trains where a provision was made in FY24, but IRCTC has represented to the Railway Board for withdrawal of retrospective enhancement. 10. The exceptional items for FY25 FY25, golden chariot charge reversals and legacy balance reconciliation are also highlighted. For the consolidated auditor's report, there's an additional point under other matters. The auditors did not audit the financial statements of the subsidiary company, IRCTC Payments Limited. These statements reflect total assets of 25.6293 crore rupees and a net profit of 0.2462 crore rupees for FY25. These subsidiary financials approved by its management was submitted for consolidation. The subsidiary's auditor is appointed by the CAG and their audit was not complete by the date of this report.
So, while the opinion is clean, those emphasis of matter paragraphs, especially concerning receivables from railways, the arbitration, NAA notice, and the non-recognition of license fees are quite significant. The subsidiary audit point for consolidated results is also notable. Given all this, what's the overall outlook and what are the key risks for IRCTC?
Disclaimer. We advise investors to check with certified experts before taking any investment decisions. The outlook appears positive on the operational front, with strong growth in profitability and revenues, especially from internet ticketing and tourism. The dividend payout is also attractive. However, the risks are substantial, stemming from those emphasis of matter points. The large receivables from railways, if they face recovery issues, could impact cash flows. The ongoing litigations, arbitration, NAA, carry financial uncertainty. The non-recognition of license fees could impact future profitability if rulings go against IRCTC. The dependence on Indian Railways for policy and operational matters is an inherent risk. The company's ability to manage these contingent liabilities and recover its dues will be key. The growth in tourism and maintaining high margins in internet ticketing are crucial drivers.
So, to sum up, IRCTC has delivered a strong performance in FY25, both for the quarter and the full year, with healthy revenue and profit growth across standalone and consolidated figures. Internet ticketing remains a cash cow, and tourism is showing exciting momentum. However, the auditors have pointed out several significant matters that need careful monitoring, including large receivables, ongoing litigations, and certain accounting treatments. The non-audit of the payment subsidiary by the primary auditor is also a point for consolidated results.
Precisely. Operationally strong, but with a fair share of complexities and potential financial headwinds highlighted in the auditor's notes. Investors need to weigh the robust operational performance against these highlighted risks. The company's Navratna status might give it more operational and financial flexibility, which could be a positive.
Thanks. That was a very thorough breakdown of IRCTC's FY25 results. A lot for investors to consider. And to our listeners, if you found this analysis helpful, please like, share, and subscribe to our channel for more financial deep dives.